to introduce you to Freedom One's new client communication series, the 8-Minute Update. This is a further opportunity to keep you informed on how we are planning and acting in today's challenging markets. Freedom One is providing you this additional information to allow you insights into how we are preparing and responding to the current extraordinary economic and market conditions. Our current theme, Protecting the Present while Preparing for the Recovery, has been in place now for 2.5 months. I'm pleased to inform you that Freedom One's actions thus far are providing investment returns, albeit negatives, that are far above what the news media may lead you to believe. Anyone with a television, radio, newspaper, or access to the internet has been inundated with depressing news on the economy and the investment markets. The dramatic headlines have unnerved even the most seasoned investors. One of the world's most respected investment professionals, Warren Buffett, has stated that the world has fallen off a cliff and we are now experiencing economic warfare. All of these issues can be best summarized in the performance of the stock market. From its October 2007 highs, the market is now down in excess of 50%. We recognize the impact these markets have had on your savings. Although on a relative basis we have performed better than the general market, we are never satisfied with negative returns. Freedom One recognizes that Warren Buffett is not the only investor concerned about the current markets and how it has affected investment values. Most of us have witnessed an uncomfortable decline in our retirement savings and are concerned about how to best respond. We recognize that as in these difficult markets is when we can best demonstrate our value in helping you achieve your long-term investment goals. We also recognize the need for clear and timely communication. It is for this reason that we have established the 8-Minute Update. We will continue these updates every other week until such times as the markets stabilize. We pledge to communicate to keep you updated on Freedom One's investment actions, our investment committee focus, mutual fund reviews and updates, performance updates, and any material changes to our leading capital indicators, of which we will discuss in a few moments. It's Freedom One's obligation to provide you the best investment allocations and mutual fund selections to meet your goals. However, you also have an obligation to make sure we best understand your long-term objectives. The actions that you as an investor can take are twofold. First, review your current contribution level. Whether you're new to retirement savings with 40 years ahead or already utilizing your savings for retirement, few of us will ever be provided a better opportunity to invest at the current low levels of the markets. Therefore, please review your current contribution levels, and if appropriate, this may be an ideal time to increase your savings level. The second item is to review your risk tolerance. In order to aid you with this, we have redesigned the Freedom One Risk Questionnaire and encourage all investors to follow the link that accompanied this email to ensure that you are taking the risk appropriate to meet your goals. We also encourage you to contact us here at Freedom One to help you determine what type of portfolio best meets your needs. Through this 8-Minute Update, we will keep you informed on the considerations and actions we are taking regarding your retirement savings. These will include changes in allocations and continued mutual fund research. In December of 2008, we reaffirmed our cautious outlook for the stock market. Our investment theme for 2009 is Protecting the Present while Preparing for the Recovery. This two-step process has allocated much less than normal amount of your portfolio into stock funds, and the stock funds we have purchased have emphasized higher quality, income-producing, and larger, more secure companies. We simultaneously increased your overall allocation to bonds and the use of stable value funds. One of the more compelling opportunities we have identified for 2009 are prudent investments into corporate bonds. Step 1 of this process has limited total stock exposure well below our historic normal ranges. Income investors have only allocated 15% towards stock ownership, and our more aggressive portfolios only have 65% stock allocation. The remaining balances have been invested in funds that focus on income-producing bonds. These allocations expose your portfolio to the lowest risk we have ever allocated. This lower risk allocation is aiding in our objective of protecting the present. Our theme of protecting the present is best demonstrated by our performance throughout the first 2 months of 2009. The bear market that began in October of 2007 has continued into 2009. Through the end of February, the stock market is down an additional 18%. Not only have stocks continued to suffer, but the average bond is also down a modest 1.26%. Although we are never pleased to lose money, all of our portfolio has been holding up relatively well in this very difficult market. Most investors were very disappointed with the returns in 2008. This exhibit sorts the performance of stock markets each year since 1929. Each year's performance is represented by the boxes with the corresponding year label. Please note the far extremes: 1931 with a negative 40% and 1954 with over 50% gains. As you may expect, 2008 is in the second from the left column. It would be inappropriate to look to the very good returns of 1954 of plus 50% and make long-term investment decisions based on the extreme. It is equally important to look to the far left of 31, 37, and most recently 2008's poor returns and make long-term decisions based on these extremes. What is more important is to recognize that yes, the stock market has had negative years, and it will have them in the future. However, over 70% of the time, the market has produced positive returns, and longer term provides the best opportunities. The opportunity for exceptional positive returns may not materialize in 2009, but we must begin to prepare for the recovery and retain the flexibility to take advantage of very low stock market levels. The investment team here at Freedom One has identified and are monitoring a series of leading capital indicators we believe will best provide insights into when the recovery will begin. By reviewing such indicators such as employment, money supply, home sales, and other leading indicators, we are able to monitor and measure the progress being made towards economic recovery. The stock market has historically anticipated economic recoveries and will begin the next bull market in anticipation of the recovery. We hope to see signs of recovery later this year, but will remain patient. When we see evidence that the leading capital indicators are foretelling of an improving economic and stock prices, we are preparing to reallocate to a more normalized stock exposure. This will include increasing our mutual fund holdings to focus on stocks and the possibility of investing in small and medium cap stocks, as well as a further commitment towards international stocks. We understand how difficult it is to watch a retirement savings not progress as planned and the anxiety this creates. Please remember, you're not alone. Freedom One is here to answer your questions and to respond to your concerns. Please take advantage of our call center, reevaluate your risk tolerance, and use the resources of Freedom One's professional retirement consultants, client relationship managers, and portfolio managers. In addition, please look to future 8-minute updates for insight on how Freedom One is best protecting the present and preparing for the future. If you feel there is anyone else that could benefit from viewing these 8-minute updates, we encourage you to forward this message. Thank you for your time. We hope you find these 8-minute updates informative in giving you insight into our commitment in helping you meet your investment goals. Our next release will be on March 27, 2009, with the topic of a current mutual fund review. We welcome your feedback and any topic suggestions you wish to see in future updates.